Before we update you on the merger, let me give you an update on NDB's appetite to grow inorganically as part of its growth strategy. It remains unfaltered. In fact, the appetite is even greater than before. What we are is today in a situation where the engagement with both the FCC as well as with the newly changed regime, there is an ongoing discussion regarding the views of the new regime in terms of their philosophy on consolidation. And I believe that there is a formal committee also appointed by the Prime Minister to look into this. So we have given our views as to why we believe that the journey we embarked last year is a valid one. And we believe that sooner than later, probably in the month of April, that that committee would conclude its findings and formally make available a public document which will then hopefully help us to form the basis to take that particular journey forward. So what we have probably done is the last month or two to, in my own words, taken a breather while we have given them the space to take this exercise and focus on the organic part of the growth strategy. But let me again, on behalf of the board and management, reiterate that our quest for inorganic growth remains as strong as ever. As the CFO mentioned, currently we are leveraged at just over 9 times. We believe that there is scope to further improve on the leverage as the business opportunities challenge, because I think one way of also balancing the ROE growth is to also challenge our own leverage expectations. So I think if that translates as we get towards the 10-11 percentages, I think there will be some opportunity. It may be towards the end of this year or maybe early part of next year. But our belief is to keep the NDB story as live as possible and continuously engage with various groups of shareholders, so that when there is that right opportunity, there won't be surprises. The people concerned will be up to date on the growth story and hopefully support us. So I think currently Bangladesh, given the fact that it's now maturing, it's been now 5 years, Vajra? I think that's given us a very good insight into the market and will help us to leverage on the investment banking advisory support more into leveraging the balance sheet at some stage. We are also looking at parts of Southeast Asia, not necessarily South Asia, but Southeast Asia, including ASEAN, into some of the growth markets where we feel that there is opportunity not just for the bank but for the group as a whole. And there are ongoing discussions at this particular point in time. So we will hopefully be able to share some of that in the coming months, depending on how successful we are in converting a quest into an opportunity. I'm told, well, Vajra can take it, but I'm told that we have looked at more than 100 opportunities, and we are currently zooming down to about a dozen or so. And as you know, in private equity, you have to start with a large number and then you distill it down. Vajra, perhaps you would want to take that on.
Yes, we are very actively looking at a couple of projects now, and investments will commence. But as you know, again, yes, the several phases we have to pass before investment is made, especially in due diligence side. So after that, we will be investing in some of them.
I think what is worth noting is, there is a quantum of capital, but we're not just throwing it away. As I said very clearly, not on listed, it's on unlisted, very critically defined space The typical deal size is between 2 million to maybe 6, 7. So it's a very defined space, which means that there is a increased amount of focus to drill down and get the right opportunity. Not correct, not correct. It was equally funded by five partners. NDB itself has put in 20% of it. So I believe we may be the only bank which has quantified the possible impact of this super gain tax as a note to the accounts. I think most of the banks have said that there would be some impact, but I think we have gone a step ahead and quantified. We believe that the worst case may be around 846 million is what we have quantified. It's still early days. There is a intense engagement with the authorities, but this is the interpretation we have along with our advisors. So what you see is what you get. But we believe that the incremental upside in terms of our performance for 2015 will be more than that to continue to deliver the type of dividends we have been giving our existing shareholders. Yes, I believe that as a team, that team is very optimistic about Sri Lanka. It is extremely optimistic about, regardless of regime change, that Sri Lanka is on a firm footprint towards economic renaissance. And some of these things we see, whether it's a supercharge or super gains, these may be one-off things. As long as they are one-off, I mean, ours is a story which is a continuum. And I think as responsible shareholders, what we expect medium to long-term shareholders is to look at a sustainable story, not on one-off spikes. So we are very confident that growth is sustainable, the business model is robust. It is not based on one-off capital gains or one-off things which are not sustainable. So we believe that, I mean, this year the numbers you're seeing really comes from fundamental banking business. So we believe that the model is robust enough to support the growth aspiration. So I think we have currently seen a gradual upward inclination in the past few weeks. But I think in the overall context of 2015, I think internally we believe that the rates will still be single digit. And what is important to us is the medium-term belief that Sri Lanka will operate within a more benign interest rate regime with a benign inflation regime rather than a toxic one. The reason behind that, sir, is if you look at last year, I think there was a 6.5 billion which came into equity as part of that capital gain, which I think the CFO may have reflected. So it takes some time for that sort of one-off gain to permeate into business growth. I think growing the book by 30% itself was, I think, an achievement. But we will, against a GDP growth of 6.5%, 7%, we literally, the ratio is about 4 times, which I think was within our risk tolerance. And I'm sure with the type of growth we have in mind for 15 and 16, that you will see that that excess equity being properly permeated, and we will see ROEs coming back to the type of levels we see. Along with also what I mentioned earlier, we see some upside opportunity into better leveraging, plus or minus around 20. You may have wondered as to why last year, while the asset growth and the loan growth was much faster than the deposit growth, even though the deposit growth at 17 was way above industry, as to why we did not push it as much as the loan growth. We had an opportunity last year to mop up close to $200 million at realistic rates of interest. So that gave us, I think, an opportunity to cherry pick the type of deposits we did locally. And it made sense last year. It doesn't mean that this year you will see the same gap between deposit growth and loan growth.
As there seems to be no more questions, that brings us to the conclusion of the Investor Forum. We would like to thank you once again for taking the time to be here this evening. And we'll also like to remind that this presentation, as well as an interactive format of the annual report and a video recording of this event will be available on our website via www.ndbbank.com.